Hey guys, welcome to Hedge. Today we're going to be talking about Bitcoin and the general market, just giving you guys a little update on some things. And that's more or less what we're talking about today. But first things first, if you enjoy these videos, you should watch to the end, get the full gist of the information. And while you're at it, definitely check out our social medias, like our Instagram and our Twitter and other stuff as well. And catch us while we're, interacting with the space if you want to interact with us. One thing I do got to say though is that this is not financial advice. Don't accept liabilities for the loss that you might incur, and this is strictly for news and research purposes. So with that in mind, you should be able to enjoy the content of this video. And like I said, it's going to be just like a little market update, some little tidbits about Bitcoin, just so you guys could hear my voice, not get too panicked, and figure out what's happening, right? So I guess to start, first thing I'm going to say is this is what the graph is looking at. When the initial drop happened, I'd made this technical analysis, and the people in the Discord and my Telegram had a chance to actually see it first as it played out. But the first thing that I wanted to mention was this. We're having a head and shoulders and HOS pattern potentially playing out or having played out right now. So we're at the neckline, right? And at this neckline, it can mean one of two things. This is basically the decision zone, but we could see Bitcoin potentially fall backwards towards the 30K zone. That's definitely a possibility. And it's based off of these supports, basically. So support 1, 2, and 3. And I even put like a miniature support here, like so to speak, like this is 39. Like this is basically the confirmation zone right here. Because once you see it break through here, it's very likely to just continue downwards to complete the pattern, because that's usually how head and shoulders end up playing out. You know what I mean? But the thing that's not so scary about this is that you see here another head and shoulders, 1, 2, 3, right? And look where it finished playing out. Finished playing out here. So we got higher over here. So even if this head and shoulders plays out, you know what I mean? Like, I personally think that we would end up bottoming out closer to support 2. But if we don't, 30K is where we would probably bounce. And on that bounce, from there, we would probably see a massive double bottom forming. That's how I'm kind of picturing it if we do actually drop to 30K in the short to medium term. But personally, I don't think we're going there. I think that we're actually way more likely to just bounce off of this zone and go upwards. That's my personal opinion. You know what I mean? Like, obviously I could be wrong. It's cryptocurrency. And not only is it cryptocurrency, it's a global market. So if a billionaire decides he wants to shit on us, he's going to shit on us. There's not much we could do other than hold or sell. But me personally, I'm holding because I got diamond hands, and I'm not a financial advisor. I'm just a crypto degen who's here telling you what the fuck is up. So I did this technical analysis based off of this, right? So we have the HOS pattern being played out. This is the previous top, right? Then from there, this is the current trend line. And the reason I respect this trend line is because A, we haven't broken out of the cycle so far of having, let's say, even from here, we haven't broken out of having higher highs and like higher lows. Like, we haven't broken out of that pattern. So until we see it like go down here, like if we break 30K, we're going back to electricity costs, guys. And then we're going to be in a bear market for a year or two while we prepare for the next halving cycle. I don't see that as the case, but regardless, we're still on this trend and we're still holding that momentum, which is fine, right? Now, support 1, 2, and 3 are psychological markers, right? So we got roughly the 40K zone, roughly about the 36 to 35 zone, and then from here the 30, right? So these were based off of, as you can see, the top is the top of this is based off of the top. This is the highest it was, based off those wicks. Then from here, the bottom is based off of these wicks at the previous bottom. And then look at this support line. This support line over here is based off of this, more or less, this bottom. And this other support line is based off of this bottom, as well as this top. So what I've noticed is a lot of graphs, they do kind of play out symmetrically. So I'm not going to sit here and pretend I'm some wizard for technical analysis, but I do play my shit based off of the most common psychological support marks, and then try to have multiple strategies for multiple ways of playing things out. Because a lot of people they'll be there saying technical analysis is the way around it, but I actually disagree. I think technical analysis is part of it, and being flexible is the most important part of it. So I have multiple scenarios here, and I'm willing to play out whatever scenario I need to survive or make money. So if I see that we're going back to electricity costs, I'm going to short, and I'm going to short hard. But I don't personally think that. So that's more or less what I wanted to say. If you zoom in a little bit deeper here, you can see we're at the bottom of the Bollinger Bands, which means that we could potentially start getting pulled back up. If we do get pulled back up, you know what I mean? Like, hopefully it doesn't end up a bull trap, and we could actually continue within our trend line towards here, towards previous all-time highs. Now, that's your Bollinger Bands. One of the things that I'm looking at right now specifically is volume. I noticed that there hasn't been large spikes in volume yet, which means that people are either still waiting to buy, or not that they're not waiting to buy, but they could think that the dip is still happening. Like, they haven't basically had enough confirmation to say, like, the dip is done, let's buy. And a lot of people are a little bit divided. A lot of expert traders like Raoul Paul, for example, are saying that we're more or less bottomed out. Now, what I'm looking at here is this. I'm looking at the RSI. So the RSI, you can see here, the relative strength index. It's basically just showing if things are overbought or oversold. As you can see, we're oversold. And I use the RSI with the money flow index. So you can see, like, both these charts, they kind of move together. And what I do is I use these two charts together to confirm one or the other. So in this scenario, imagine you see, okay, everything's being oversold, but the money flow index is high, like up here. That means that, fine, we are oversold, but we're also being overbought because the money flowing in is high and people are interested in buying. But in this scenario, right, it's like things are spiking downwards into oversold, but the money flow index hasn't confirmed that money is racing to come back in yet. So I use those together to confirm that. And then, considering that I haven't seen the money flow go back up, I'm not rushing to buy the dip right away. Like, I'm going to buy some DCA throughout this entire period. And the other thing too is, like, you could see here in spikes where it goes into overbought territory and the money flow index isn't necessarily following. It's you know what I mean? Like, it's to confirm each other, more or less. That's how I use it. Now, personally, like, there's a lot of different strategies for this. Like I said, I'm not going too much deeper into this. I just wanted to give you guys, like, an idea of what I'm looking at. And until I see the uptick in the MFI with the RSI as a confirmation, I'm going to just be DCAing this dip. We might end up in a consolidation period. So if we hold support 1, we're going to be consolidating on the support 1 line, like within this range. And then, like, going deeper into it, right? Like, we kind of broke beneath it with wicks, but for the most part, like, look, we haven't exactly lost support number 1 yet. So for the people that are panicking, there's no need to panic yet, because there's still a lot of room for potential here. We didn't lose anything yet. We are still okay, right? Now, I think for the most part there, I'm just going to, like, kill this technical now and start going into the news. A lot of people have been saying, oh, well, Bitcoin is correlated to the S&P 500. And recently I had a debate with someone on a Twitter space, and I personally think they're wrong, because when they made this, it was 2 years ago. And the reality is that Bitcoin has been very much on its own path. So if it did follow the S&P 500, it is not following the same thing now. And Raoul Paul actually made a counter argument that I think he's personally correct on, is that Bitcoin is now more closely following the Amazon stock chart than the S&P 500 at this point. And I think it has a lot more to do with the fact that the S&P might be overvalued and Amazon was undervalued. Because what is the S&P 500? It's basically a collective of 500 companies, and it's like a fund, so you can get exposure to multiple tech companies. And from there, like realistically, it's like you're trying to get the top 500, but most of the top 500, other than the main hitters like Amazon, Facebook, blah, 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 so to speak, like the main ones, you end up finding out that a lot of it is kind of bullshit. You're just getting exposure to bullshit. So the S&P 500 is probably overvalued. That's my personal opinion. I could be wrong, and I'm not just going to base it off of a 2-year-old article. I just wanted to show you that people have thought that Bitcoin has the same correlation. But as you can see here, Amazon stock performance versus Bitcoin, right? So this is Amazon, the early 2000s up until I think 2010. And look at that, right? So it's like we're following that graph, right? That trend. That's Amazon between 2003 and 2011. Now let's look at Bitcoin. You see that? You see that? It's eerily similar between 2013 and 2022. So 9 years and 8 years. And this was roughly about the time when Amazon took off. So Amazon went from just being something that was Amazon to Amazon. And if Raoul Pal is right, and it's very possible he's right, the short-term turbulence doesn't mean much, because if Bitcoin follows that trajectory, that's huge gains. That means that we could potentially see Bitcoin really flying off the handle to beyond all-time highs. Maybe in the short term, things feel bearish, but don't lose sight of the long term, because this is a long game. If you actually believe in Bitcoin, you're playing for the long game. If you're playing for small financial gains, little 50% flips, and you're trying to get fiat, fine, panic, because you're playing that game. That's your choice to play for fiat. I personally believe in Bitcoin and crypto more than the fiat dollar. So in my scenario, I see this like, okay, we got a little hiccup, but for the most part, if we take the same trajectory in terms of exponential gains, Bitcoin will be huge in the upcoming years. So that's my 2 cents. And by the way, guys, just remember, Bitcoin is 22% up from last year at this point. So even though we crashed, we are still 22% up from last year at this point. So one thing I've come to notice is Bitcoin year over year, whether or not there's a crash or not, is still above the previous year. And that should tell you something. It's not often where Bitcoin closes a year lower than the last one, even after a big crash, because statistically, it's just the way it ends up playing out. And I've seen those graphs before. I gave you the S&P. I gave you the Raoul Pal's observation. The other thing I wanted to do is the SEC is, or rather to talk about, was the SEC basically delayed their decision on Bitwise and Grayscale's Bitcoin ETFs. And more or less, they're trying to figure out what's going to happen with these ETFs by February 1st and February 6th. People are going to start determining whether they're going to approve or disapprove them. And from there, I think the SEC is just kind of sitting on its hands, because it understands that the second this starts, Bitcoin mania is going to go full out. And the thing is there's only so long that they could delay it, considering that Bitcoin has continuously proven itself as its own asset class. So if the SEC continues to reject it, reject, it's only a matter of time before people defund the SEC or say like, hey, what's the issue here? Because if everyone is pushing forward and everyone wants it, not only does everyone want it, but it's an asset class. It's no longer just speculation. That's going to, like that, there's only so long they can keep rejecting it. And the reality is, if they keep rejecting it, people will start taking their money and bringing it elsewhere, because they'll want exposure to these things. So like in Toronto, we have ETFs for Bitcoin and Ethereum. Why don't they have it in the States for spot Bitcoin? It's because they don't want it to go mainstream, because they understand that once Bitcoin goes mainstream, people will go into ownership of Bitcoin instead of just trusts. So the boomers will go into trusts and mutual funds for Bitcoin, whereas people like my generation will actually go and own the Bitcoin. And when we do that, guess what? The US dollar is going to lose its hegemony, and it's going to lose its status, and then it could potentially put Bitcoin into a reserve currency status. Because guess what? People trust it more than every other dollar currently. And until they don't, it's a potential threat to the US dollar. So that's definitely something to keep in mind. On to the next. These are some other things. These are a little bit older news, but I wanted to bring them out. First of all, even though everything is dropping, Bitcoin's hash rate hit an all-time high. So it means that even though China knocked down its hash rate and things hurt Bitcoin, guess what? We are hitting a dip with hash rates going to all-time highs, meaning that the amount of people mining Bitcoin is at an all-time high. The amount of processing power is at an all-time high. Like, that's bullish. Regardless of how bearish the chart looks, that's bullish. And I wanted to remind you guys about that. You know, I'm not going to sit here and say that, you know what I mean? Oh, the price is going to go up because of that. I'm like, no, this is just a factor to consider. Next thing, Bitcoin wallet addresses created in November, 1 million. 1 million in November. Look at that. 1 million. That's a lot. It's not a small amount. That's the beginning of mainstream adoption. Just a heads up, or at least my understanding, right? Next thing, 7 more NFL players choose crypto over cash salaries. So now even people like Aaron Rodgers, Tom Brady, Odell Beckham Jr., Trevor Lawrence, Saquon Barkley, Sean Culkin, Aaron Jones. These are all relatively well-known football players, and they're taking their salaries in crypto. That should tell you something. Tom Brady is a very successful, especially he's the one that stands out the most. But Tom Brady, I think you know, he's probably the most successful quarterback ever. And while multiple people could argue whether he's the best or not, I personally, you know what I mean, I like football. I don't think he was the best. I'm more of a Peyton Manning fan. But I do respect that he is the most consistent quarterback, and he plays very fucking well. Very fucking well. He knows what plays to make all the time, and that's why he's got so many fucking rings. At this point, the only person who has more rings than him is Jennifer fucking Lopez. That's it. Yeah, I'm sorry. I had to rip you, Jenny. I know you're from the block, but that's just the way it is. So eventually Thanos is going to have to fight both of them.
That was good.
That was a good one. Yeah, we're not editing that out.
No.
Last thing too was getting paid in BTC was a big part of the reason why MMA fighters signed with Eagle FC. So Eagle Fight Club is just a competitor to the UFC, but it's Russian based, and a lot of people like, I think Khabib Nurmagomedov, he I think has something to do with that. And in fact, that's what he does. And that's actually my favorite UFC fighter. And I've actually had the pleasure of training with people from his part of let's say the USSR, or from not necessarily Dagestan, but from Kazakhstan. So it's like my martial art instructor, he came from Kazakhstan and Uzbekistan. He was a national combat sambo champion of his time in the 90s, and he was supposed to represent Russia for the Olympics, I think in the year 2000, but it didn't end up working out for him, sadly, due to immigration issues. So I respect the people who come from that block of the world because they do make the best fighters, and I do genuinely believe that things like that, the Russian fighters are going to be the best in the world, and if they're starting to take Bitcoin and other things like that, that should be a very bullish sign. From there, I guess that's more or less going to wrap up this video, guys. I hope you enjoyed it, and take care of yourselves.